Thanks for joining us on the News at 1. Let's take a look at your market news now. Asian markets were mixed today. The dollar inched higher on optimism about U.S. tax reform. Japan's Nikkei dipped in choppy trade, with Toray Industries shares diving after it said a subsidiary had falsified data. But concerns that North Korea might launch more missiles lifted stocks linked to defense. The Nikkei closed 0.04% higher. Hong Kong's Hang Seng Index ended little changed after trimming early losses. Mainland China stocks reversed earlier losses to end higher. This was led by gains in consumer and material firms as investors hunted for bargains after recent falls. The Shanghai Composite Index gained 0.3%. Wall Street's major indexes ended little changed yesterday, retreating modestly from record highs set earlier in the session as gains for Amazon countered losses in shares of energy companies. Investors also digested strong economic data, which showed that sales of new U.S. single-family homes unexpectedly rose in October to a 10-year high amid robust demand across the country. Prospects for corporate tax cuts have also occupied market watchers. The Dow Jones Industrial Average rose by 0.1%. The S&P 500 lost 0.04%. And the Nasdaq Composite Index dropped by 0.1%. Now for more on the market news, we cross over to Nompumelelo Siziba. She's standing by at the JSE. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, European equities and the local all-share index have swung into positive territory after a negative start. On the all-share index, we did see that financials were doing rather well. They were up around 0.5% when I last checked. Interestingly enough, when we think about the fact that we've just been downgraded to junk status by Standard & Poor's, and that will automatically mean that our banks will also be downgraded to that level. But they're doing quite well. But we do see that the mining stocks have been hit hard today. They were down by about 1.5% earlier. That might have something to do with the fact that the rand has been relatively firmer, although it has lost a little bit of ground relative to where it was at the beginning of the session, but generally doing quite well against expectations. Following that downgrade, the expectation was that there would be a blowout in the South African rand, but that really hasn't happened. And then we see on the oil side, oil prices wavering slightly. OPEC is set to meet on the 30th of this month. They're going to decide whether they're going to extend their oil curb. You'll remember that they have been cutting production by about 1.8 million barrels per day. And it's not clear as to whether they'll continue that beyond March 2018 or whether they'll cut it. And so there's a lot of uncertainty around that. And we've seen the oil price suffer as a result. But it's still, Brent crude still elevated above $63 a barrel. Let's take a look at the indicators. Well, I'm joined by Lee Riley. He's from IG South Africa. Thanks for joining us, sir.
Thanks for having me.
Good stuff. To what extent is the recent global market caution that we're seeing in equities, is it influenced by whether or not Mr. Donald Trump will be able to push through his tax reforms?
You know, interesting question. I think it's a little bit more complicated than that. I think the fact that we saw the new Fed chair being confirmed in today, his name escapes me,
Mr. Jerome Powell.
Jerome Powell, that's it. Being sworn in today, there was some concern that he was going to take a completely new route with regards to policy reform. It seems like he's going to be backing Janet Yellen's policies she's put in place. He's come into what is quite a strong economy. Arguably, the ball is his to be dropped, given that she's come through quite a challenging time on the back of the recession, driving job creation, ensuring that inflation is in line with expectations. I think the Fed has managed their mandate quite well up until now. The big question is how they are going to continue to communicate the unwinding of their book, and what rate hikes are we going to see in the future. How Trump's tax reform affects inflation will be a big question, and if it does start to affect inflation, then that could really put a bit more pressure on the Fed, as they will have to raise interest rates. So we could see them butting head in the event of that. So yes, that could certainly have an effect. In the interim, we'll see these knee-jerk reactions when we see tax reforms or we see different policy reform coming through, duly in line with any Fed announcements as well. So I think you've got to take it with a pinch of salt, and you've also just got to look for the immediate market reaction on the back of any sort of announcements that we see.
And when we look at the second largest economy in the world, China, it's said that they are also to a degree influencing market sentiment, because they have had a sort of jittery time as the authorities there try and curb risky financial behavior, shadow banking, and so on and so forth. To what degree is this affecting markets? And also, if that continues, if that policy continues and the jitters continue, how might it affect commodity-producing countries like South Africa?
Difficult to say, because you're never quite sure what the Chinese regulator is going to do to either stem outflows of capital or put in place liquidity constraints or increase liquidity, so increase buying in local shares in particular in China itself. What is a major concern, if you look at some of the commentary coming out of them from last week, is of the 1,420 odd shares that make up the Shanghai Composite, only around the top 10 within the index have driven 90% of the gains. So very similarly in our own market, transactions are taking place at fairly low volumes, and the concern is that this could get a bit toppish given that the gains that we've seen, and we could see some fairly large gaps open up when we do start to see selling, which could mean increased volatility. Volatility has been very weak this year because we've essentially been going in one direction. And if that does start to happen, then that could have a real effect on outflows, on trading, and then the knock-on effect, maybe later on down the line, could have the effect on commodities. It's early days still. We'll be looking at certainly the Fed decision from the United States, what central bankers are going to be doing in the Bank of Japan, along with the ECB, to sort of lead the way from the Western sort of developed world, and then how China reacts to some of the trading that takes place in their market. But as I say, it's difficult to, it'll be a thumbsuck at best if you guessed what the regulator or the central bank in China would do to curb some of that trading that's taking place.
Let's take a look at this phenomenon, this cryptocurrency, Bitcoin. It's become all the rage. Its value keeps on galloping. It's nearly at $10,000 per coin. And apparently in Zimbabwe, because of a lack of liquidity there, people are flocking into it. What's your take on it? Does it have a fundamental role? And is it the future?
At this stage, it's speculative at best. A little while ago, we had the same conversation here about whether you should put your entire bonus into it. I don't think that it's something that you should do. I think if you are going to take a position, buy the pullbacks. Quite often retail traders would go in at the very top end of the market, or where the price has progressed to. I would be waiting for the first really decent retraction in price to then take a position. But again, be cautious with the fact that you are basing your bets or trade on something that doesn't really have an underlying value. You're backing the technology. You really are backing the hype at this stage. It's very much bright talk. And a lot of institutional and retail traders are getting involved in it just because of the fact that it's climbed more than 700, probably nearly 800% in the year now. So be cautious. We could be at the early stage of implementation, even though that Bitcoin is 9 years old, almost 10 years old already. And hindsight's a perfect science. Once something has done 700 or 800%, it's very easy to look back and go, oh, I should have, would have, could have, but you didn't. So I think you've just got to understand the risks you're taking and be cautious of what you're getting into.
In 30 seconds, why is the Rand relatively firm despite the downgrade?
Because we didn't get downgraded by Moody's. I think that's the big one. in particular because they look at both local and offshore debt in currency terms. And the expectation in a medium term is that it may very well come. They're giving us some reprieve. They don't want to be vindictive. They don't want to put us in a position where we see massive outflows both in bonds and equities. So for now, probably the reason why we're seeing some decent numbers in the rand.
Okay, cool. Thank you very much for your time, as always. Well, that was Lee Riley. He's a strategist at IG South Africa. After a short break, Nzinga has more business news for you.